What's up, guys? I'm back with another one, okay? So today, basically, I want to start off by saying thank you guys so much for the support that you're showing me. I've been seeing the views go up, people commenting, the likes as well. So thank you guys so much for that. Basically, really appreciate you guys. I started this channel really just because I got out of college. And, I was I'm still trying to figure out what I want to do. I'm getting my certification in IT, and certain things as well. So with that, I started learning other things and seeing how to invest. And I realized that basically the education system really lacks when it comes to financial literacy, as well as teaching young people how to, save up their money, how to invest, and just how to be smarter with their finance in general. And thanks to certain people on YouTube, thanks to certain books that I've read, certain materials I've studied up on, I'm here today to kind of give you guys that same thing that I admire as well. So basically, you guys can learn from this information. You guys can be enlightened by this information. You guys can, basically use this information for motivation. And I'm going to say thank you guys so much for the continuous support and for watching me. And we're going to get straight into it, okay? So today, basically, I'm giving you guys the safest way to invest into the stock market, okay? So I've noticed that, that most investors do not invest in the safest way possible. Investing does come with its risk. You're not guaranteed to make money at all. You actually will lose your money. And they do say most investors are going to lose your money. So it does come with, it does come with risk. Okay. So basically, like Fitbit, people started investing into them around the time that they opened up. They did their what is it called? When they opened up, basically. So people started to invest into them. They invested at maybe a pretty high price, and now they're trading for like, I don't even know, maybe like $5 or I really don't know. But, people definitely lost money if they kept it for that long. People lost money, even if they didn't keep it till now when they first opened their public trading. Okay. So, you can't lose money. And Fitbit, it seemed like a good company. A lot of people were buying Fitbits, and you see, just like that, people have lost money in that company. So that's just an example. But again, I am going to give you guys the safest way, my method of how I invest. And I believe it is one of the safest way to invest if you're solely doing investing, because there is a difference between people who invest and people who trade. Okay. So investing is when you look into a company's balance sheets, you look into a company's cash flow, their liabilities, their debt, and you see exactly where this company is, where their standing is, and how they're doing currently as well. And so when you invest, you look into all of these things. You look into the EPS, you look into their payout ratio, you look into their market cap, all these crazy dialect and all that, whatever, just to basically invest, which they do help. And that's what I use, and I advise everybody to look into that as well. I will make videos about how to read a balance sheet, but it's gonna take some time, just because there's so much nuance, and there's always something different to learn. Like, it's ridiculous. But like I said, when you're investing into a company, look at these things. Okay, look at their current liabilities. Go to Yahoo Finance, type in the company in the ticker area, the search area, and you'll be able to see the entire company. You can go to, I think it's in their financials. You can click on balance sheet, and then you'll be able to see certain things as current liabilities. You'll be able to see things as current assets, total assets, and total liabilities. You'll be able to see stockholder equity, which is the total asset minus the total liabilities, and it gives you the stockholder equity. And if that increases over time, basically that company is in a good standing. It is bringing profit to their shareholders year after year. And you want to make sure that the current asset is higher than their current liabilities, and they'll be able to pay it off. So it's just a lot of stuff that goes into it. So look into those things. We look into a balance sheet. You'll be able to find a good company, look at their 5-year chart and see their trajectory, as well as their max chart. And all those things will help you. So, if you need time to, go back and rewind everything I said, take notes, definitely do so, because it will help you. you when you're making your stock purchasing company purchasing decisions. Okay, so yeah, so the safest way that I invest is basically I have two brokerages. Okay, I say this a lot. I'm going to continue to say it just because I think everybody should, it's not, you don't have to, but I do. So I have a Robinhood, right? And my Robinhood is for day trading, options trading, more for options trading. I haven't day traded in a while, but really for options trading and learning how to options trade a lot better, more proficient. And I'll bring that to you guys as well as time goes along. So if you haven't watched my last video, please watch it. It's a little bit about options. Actually, it's the whole thing is about options. So just watch it and, it'll help you know some things that I'm doing currently in the market, okay? So basically, I have that Robinhood, and I also have a Fidelity, which is, to me, is a more professional brokerage. I can call them up. I feel safer investing long-term because right now, I only have 800 in my Fidelity, 500 in my Robinhood. It's not the biggest account, obviously, but over time, it is going to build up, and I want to have it in a place that I deem more safe, okay? So I have a Fidelity, and with them, they let me do fractional shares. To buy fractional shares. I already talked about this with you guys. So instead of buying the whole share at once, which might be a little bit daunting on some people like myself, you can just buy it as a portion, like $10 here, $20 here, things like that. It makes it easier, of course, trust me. So I have a Fidelity, I have a Roth IRA. We already discussed what the Roth IRA is. Roth IRA basically it's an investment portfolio I put my money into, and I buy stocks in that portfolio for retirement. It's a retirement portfolio, my bad. So, but it's also investments as well. So, they coincide. So I do that. And, I can't take I can't take out the profits that I earn from my shares, the stocks that I buy until I'm 59 and a half. Okay. So, that's what I do. And the good thing about having a Roth IRA is basically whatever you invest into. So if I invest $500 and it goes up to $1,000, whatever I invest to $500, I can take out without receiving a penalty or having to pay taxes. Okay. But if you decide to take out the profit too, that's when you will receive a penalty and you will have to pay taxes at the end of the day. Okay. So that's what I'm doing. Seems perfect for me. So I like it. I enjoy it. And I have an individual account as well. And my individual account, I'm not going to lie, I don't have too many stocks in there, just a couple. And I use that just to play around in my Fidelity, just to kind of see what this is going to do here and there. So if you watched my last video about my top 5 holdings, this is exactly what I continue to invest into. I don't purchase numerous shares, stocks, companies thinking they're going to go up. I do not do that. I don't overly purchase companies, So I purchase the, 6 that I think are good, and I continue to put my money into them continuously. If they dip, the same thing continuously over time. And that's how I feel is the safest way to invest, okay? So I do have Apple. I have in my Fidelity. This is all about my Fidelity right now. I do have Apple, and I got them at a good dip when they were at 270, and they're now at what I would say 317. So I got them at a good dip. I'm continuously investing into them, and just I'm waiting for them to dip to invest into them again. I'm not going to do so right now because they're really at almost their all-time high. They're really trading really high. So I have Apple. I do have a portion of Amazon, not the whole thing. I'm not rich, I do have a portion of Amazon. I have Pepsi, one of my favorites, Pepsi, because they just seem like they, whatever's going on, they don't really go down too much, and they don't really go too high either. They're like, there's something that to me will store my money in case there is another stock market crash, because Pepsi does. They deal with a lot of brands that, they have Lay's chips, a bunch of snacks and stuff, the food that people need. They deal with Gatorade. So Pepsi is, to me, a good one. See, and what else? I have Waste Management. I have Visa, and I have a dividend stock as well. And I believe I have Microsoft too. So that's what I have in my Roth IRA. As you can tell, these are all strong companies, and I got them all at a dip. And there's some of them are still at a, not really. The only ones I would say will probably be Waste Management and Realty Income. And the only reason I keep Realty Income is because they are a consistent monthly dividend paying stock, and they've been paying dividends for 50 years. If you don't know what dividends are, please watch my a couple of videos ago, and they'll be able to tell you what dividends are. But they pay me dividends every single month, and they do have a long way to get to to reach their highs before they were before this virus happened. Okay, so that's why I have them. Those are the only dividend stock that I purely invest into for dividends. I might add another one coming up, but as you can tell, my portfolio isn't super huge, but they're strong companies. And guess what? They all gave me really high returns already. Okay, so I'm already seeing some nice profitability throughout all of these stocks. Okay, I do have some in my individual. I have stocks in my individual account as well, but the stocks I have in my individual account are just Carnival Cruise Line. And I have two cruise line industries. Okay, reason I did that is because just to take some risk. I feel like they are going to go up, so I took some risk and I have them in there, but I'm not investing into them, like repeatedly. I'm only doing that for my Roth IRA stocks, so I'm not investing into them repeatedly. I'm just going to see what they get to, and maybe when they start trading a little higher, maybe I'll start. Everybody always going to tell you buy at the dips, which is true, but sometimes to secure some risk, you want to wait a little bit to see, how that company is going to do at the end of all this. And when it does, even if it does go high, it doesn't really matter. You can, if you still want to keep it, you can invest into it here and there, or you can just take out the profit that you made. I'm probably going to sell maybe half my shares, take out some the profit I made off of it, which is okay. All right. So the thing is, I do have a mutual fund as well, right? So it's my favorite mutual fund. I don't know the name off my head. It's a health sector mutual fund. So this is what I do. I look, because Fidelity basically gives me, and when you go to the bottom, you can search all about that mutual fund. And I saw their trajectory, if I'm saying that right. I saw their growth from 2010 to 2020. If I invested $10,000, and they'll be grossing me right now, I believe almost $50,000. Even during this virus, I would have $50,000 right now if I invested $10,000. In 2010, they have a consistent upwards trend, and they're doing one of the best. So I decided to put that in my individual account. So you're asking me, why did I not put that in my Roth IRA? Because this, in a 10-year span, that was able to grow to $50,000. Okay, I don't want to have that absorb too much. I don't have that in my Roth IRA. Okay, because I can't take out the profit until I'm 59 and a half. With my individual, I could take out the profit anytime I want to, okay, without a penalty, So I may have to pay taxes, which is okay with me. At least I don't have a penalty charge, that 10% penalty charge for taking out my profit. You know what I'm saying? So that's why I decided to leave my mutual fund in my individual account in my Fidelity. So if you have a mutual fund, I would suggest maybe leaving it in your individual account and not in your Roth IRA, and just invest into it in your individual account, because you can only put $6,000 in your Roth IRA every year. And with that, I'm planning on putting as much money as I can, So that's me. That's the safest way I invest. I don't have too many stocks going on. I have stable companies that I got at dips, okay? And I'm investing into them consistently over time. I might be taking a break here and there from Apple, from Microsoft, until they dip again. I know Microsoft dipped a little bit to 177, I believe, today. So I could have bought it. I decided to wait off. Maybe they might go down a little bit more later on, or if they don't, then that's okay with me. I just keep investing. I still have a good price that I bought it at anyway, and they're still strong companies. Everybody uses Microsoft Excel. Every jobs prefer something like that. So it's that's basically how I safely invest. So I telling you guys, you should do the same. And if you do want to day trade, first think about having a long-term portfolio. If you want to options trade, first think about having a long-term portfolio, okay? Put in maybe 500, allocate some of your money into long-term stocks that, have good returns, have a high chart, a high trajectory in their 5-year chart, their max chart, look into their assets and their liabilities, like I told you, on Yahoo Finance, okay? So you can look into those things and see that. And, you'll be okay. I'm telling you, because look at me. I'm not taking these crazy risks with these crazy companies thinking that they're going to go high. And if they do, well, that's nice. I still have my own investments. I still have a good amount of savings, because I think about it as savings, okay? Savings and investing. So that's what I think about. I'm not trying to lose too much of my money, so I'm not going to invest into every little thing that comes my way unless I am sure, or unless I'm ready to take that risk. So now that I have those holdings, it lets me be able to options trade and do those things without thinking like, oh, I got to make this, without thinking, certain things, and having like basically having free of mind, having a breath of fresh air, when you have no long-term plan, you have nothing. You just doing it at a whim. And which some people do, some people make money from it, and that's because they've actually had trials and errors. They practice that, So you being a new trader, you're not gonna get their opportunities, and if you do, well, good job to you. But that's my safest way of investing. And if you want to know when to purchase a stock, when they're like, especially like I told you, those high end stocks, when to purchase them. Basically, you can look at Yahoo Finance and look at a moving day average. Basically, you look at the chart and you can put it on indicators. Look at the moving day average. You can set it to 200, which is basically the moving average of 200 days, or you can set it to 50. It just depends. And with that, you can, if it's above the line, basically that means it's trading at, their consistent numbers, the consistent level. But if it's below it, that means they're at a dip right now. So whenever it's below it, you can buy those those really reputable company stocks, not no random, those really. So if I look one day and I see that Apple is below that 200 moving day indicator, or I say, okay, now it's the perfect time to buy it because it's below it. But if it's above it, I might want to chill out and not buy it, or maybe I'll just put a little money here and there, So you can do that to tell you when to jump into it, and that would greatly help you guys out. So, like I said, thank you guys so much for, watching my videos, for your comments, for your likes. I hope you guys are still there with me as we go through these elevation and trying to better ourselves. People, they want you to be scared of the stock market because of what's going on, but I'm telling you, it's not that scary once you're taking a safe risk. Okay, it's not that scary when you have a long-term portfolio and you're not looking to flip and do these things.